Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the domestic stock markets failed to hold on to the opening gains yesterday, and that was weighed down largely by the broad-based profit booking that we saw across the board, especially the mid and the small caps, which extended their slide on rising concerns on high valuations as well. In fact, it was the mid-cap index that fell over 2% in trade yesterday, as the entire PSU basket also came under profit booking. The question is, will there be further profit booking, or will improving macro data in terms of the IIP growth and inflation data aid the markets? We will tell you all of it, but first up, the top headlines we're tracking for you this hour. Indian stocks are likely to remain under pressure on Tuesday as flat overseas cues, disappointing quarterly earnings and stretched valuations prevents bulls from aggressive longs. Investors await third quarter results of Eicher Motors and Hindalco. New investors are advised extreme caution in trying to catch the falling knives among cash counters as smart traders use third quarter earnings data as pivot points to press sales in overheated shares. Very good morning to all our viewers joining us right here this morning, and good morning to you, Shail, as well. Just like how I was pointing out that, it was the weakness in the benchmark Nifty and the Sensex, and that was accompanied by a deeper cut in the broader market indices, the mid and the small caps yesterday. There was also an increase in volatility above the 16 mark in the index as well that caused further discomfort to the markets in yesterday's trading action. The question is, Shail, whether Nifty will still remain a sell on rise category.
Good morning, Sakshi. And one day before Valentine's Day, I don't think so. Bulls are any more, how should I say, confident than what they were yesterday. In fact, there's likely to be more weakness creeping in. I have done all sorts of color therapy to ensure that they come back on Dalal Street. But, only time will tell. But let's just sort of stand back and think about what has happened in the market. And starting with the daily chart that we show you is the Nifty in front of you. If you notice very, very clearly, Sakshi, that in the last 4 trading sessions, 3 have ended in losses. And these losses, while not substantial, but are problematic. Let's just put it diplomatically. When you see the earnings, profile of how Nifty companies have performed over the last third quarter, there are some things to cheer about and there are some things to be worried about. The worry is, of course, visible on the chart. I'm just requesting PCR to fire the daily chart of the Nifty, and from that you'll see how the trend is flat to weak as far as the Nifty is concerned. Now, it's the banks, Sakshi, that are pulling the index lower, and this is the Nifty chart that I'm talking about. 3 days of losses out of 4 sessions that have come in. The recent high, Sakshi, was 22,072, and from there about 450 points have been taken out within the Nifty, and that's primarily because of how banks have underperformed. At yesterday's close, which is 21,616, the Nifty is now, Sakshi, at a 2-week low. We haven't seen this number in February, what you see so far, and this pain is likely to continue. If you see yesterday's session, Sakshi, the advanced decline ratio on the Nifty was 16:34. So for every 1 stock that advanced, 2 fell, and like I said, it was the banks that created a lot of problems. Now these are the basic structures that we talk about. However, February's expiry is very long. Remember, it started on 27th of January last month, and it goes on till 29th of February, right to the real end. I was just analyzing the options chart, Sakshi. It's extremely bearish. And if you look at our yesterday's commentary, we had told our viewers that you are seeing topping out phenomena in mid cap Nifty and small cap Nifty. That's borne out fairly dramatically. When you look at the options charts, actually, there is a bit of a pain back again as far as the Nifty is concerned. And this time you see a very how should I say, strong bearish tendency towards 21,500. If you see the put data there, a lot of put unwinding has happened. About 6,14,000 puts have been taken out of the system, and that essentially means that 21,500 is most likely. You have strong supports at 21,400, 21,350 and 21,300. So that's how the structure of the Nifty looks at. Any rise that you see during the day should be an opportunity for traders to go short. If you look at what we are looking within the Nifty, the major earnings today are Sakshi 172, and this is the last two major days, which is today and tomorrow, when you will see a plethora of earnings. And within the Nifty you have Aisha and Hindalco, and within the how should I say, the PSU low ticket high beta items, you have BHEL, Oil India, Nalco, NBCC and IRCTC. आज भी parent teacher meeting है.
Okay, so the test continues for the second day in a row as well. On the Nifty Bank then, Shail, we've seen that it experienced continued dominance by bears, with clear rejection being observed at higher levels. It also closed below the near-term support zone of 45,000 as well. What does this really tell us going forward from here for the Nifty Bank now?
So, Sakshi, all of Nifty's problems can be linked to the banking sector. In particular, the four private sector banks, HDFC, ICICI, Axis and Kotak. There is little or no movement as far as the private sector banks are concerned. So, Bank Nifty, the trend is weak, and the daily chart is right there in front of you. You'll see that the index is very precariously balanced on the 20-day moving, 200-day moving average. And actually, traditionally we've seen some bounces coming from there. But remember, this is the second test of the 200-day DMA. Let's hope and actually pray that this 200 DMA holds, and therefore the pain that we have seen in the last 7 odd trading sessions, that disappears. If you look at how HDFC Bank has performed, Sakshi, it's down 3.3% in this expiry. ICICI, Axis Bank are also in the red, so is Kotak. It was the PSU banking basket that was holding the fort on the Bank Nifty. Sadly, they have little weightage, but profit booking in SBI, Canara Bank, Bank of Baroda, PNB yesterday shows signs that traders on the long side seem to be more interested in pocketing gains rather than helping the Bank Nifty balance out with its PSU components. So that is the sad story. And the option chain of Bank Nifty, Sakshi, is weaker than the Nifty. As you know, this is a very volatile index. About 700 points is the intraday volatility of the Bank Nifty between the high and the low. And of course, we are on T-1 as far as Bank Nifty is concerned. Bulls offer very small support for this index. 44,500 Sakshi is likely, and 44,000. There are lots of aggressive traders even planning for that, Sakshi.
Okay, so we will have to keep a keen eye on which way is the Nifty Bank really headed, whether it's 44,500 or 44,000 on the downside now. FNO space, Shail, any particular stocks that you may be watching out for?
Sakshi, Aisha and Hindalco. Okay. These are just earnings boys. I refrain from mentioning anything as far as individual stock futures are concerned for two reasons. One, the market is looking for absolute and how should I say, definitive profit booking. So whatever we mention on the long side probably may not work for. except for IT. And I'll request the PCR to show the monthly chart of the Nasdaq that we have prepared, Sakshi. You'll see a record high being hit on the Nasdaq. Therefore, we'll see local IT offering support to the Nifty, and usual suspects, TCS, Infosys, Coforge to some extent within the F&O space, Wipro in particular, and HCL Tech. So IT is what I am looking at, and that's most likely to offer some consolence to the Nifty also.
All right. Let's also look at how the global market cues are then shaping up for today. So the Nasdaq slipped on Monday afternoon after briefly surpassing its record closing highs from November 2021, while the Dow Jones also rose modestly ahead of the two US inflation reports this week again. That could influence the Federal Reserve policy, so that's going to be key. The benchmark S&P 500 closed slightly lower in trade, but it remained just above that 5,000 point level that it had crossed on Friday as well. So that was a mixed close that we saw for the US. Now, Asian markets mostly rose in the early market opening trade as more and more markets returned to trade from the Lunar New Year holiday, including South Korea and Singapore as well. We did see that Japan's Nikkei popped about a 1.8% move in the initial trade, and now it's inched up high even to 2.5% up. And you can also see Kospi, Shanghai, all of them upping trade as of now. However, the Hang Seng is slightly down in trade. Now, when we talk about the trends in the GIFT Nifty, they indicate a positive start for the broader index in India with a gain of 52 odd points. We'll keep an eye out on that as to whether this really move sustains. As far as the flows are concerned, they were net buyers in yesterday's trading action. They bought about 127 odd crore rupees in the cash market, while the domestic investors also purchased more than 12 odd crore rupees in the equities market in India in yesterday's trading action. Of course, we will also see the markets reacting to the two macro data numbers that came out last evening. India's January CPI inflation, that is eased to 5.1%. The core inflation has dropped to 3.6%. And December IIP growth has seen an uptick to 3.8% as well. So these are particular macros that the markets will be reacting to. The stocks particularly that we need to watch out for, JSW Energy, its arm JSW New Energy has got a letter of award for 500 megawatt wind project from Solar Energy Corporation of India, SECI. And Orion Pro Solutions is the next stock that I'm keeping an eye out on. That's looking to raise about 200 crores via an issue of 9.02 lakh shares at 2215 rupees per share via preferential allotment. So that could be in focus. The third could be a very key stock, Coal India, the country's largest coal mining company. It reported its numbers, and fantastic set of numbers at that. A profit of over 9,093 odd crores for the third quarter, rising sharply over a year ago period. We've also seen a healthy income and healthy operating margin with a fall in input costs as well. The revenue from operations grew by about 2.8% to 36,154 odd crores. So that's going to be key as well. The company also announced an interim dividend of 5.2 rupees per equity share too. The other key stock in terms of earnings will be SAIL. And now the state-owned steel company has also reported its numbers. The consolidated net profit of 423 odd crores for the October to December period of FY24. That slipped, however, from 22% on a high base of Q3 FY23. There was an exceptional item gain of 298 crores rupees. So that will be a factor to watch out for. The revenues, however, also slipped about 6.8%. So that's going to be key to watch. Lemon Tree Hotels, the company has signed a license agreement for a new hotel in Telangana under its brand Lemon Tree Resort, and this hotel will be spread across 5 acres and have 50 rooms. That's also going to be in focus as well. Let's now welcome our guest on the show. We do have Dharmesh Kant now joining in, Head of Equity Research at Cholamandalam Securities joining in. Dharmesh, very good morning to you. Good to have you with us on Business Today. Tell us, what do you make of the kind of fall or profit booking that we saw across the board in yesterday's trading action? And do you really see that this will have an extension in trade today as well? Or do you see, this was long due and this has come in now and this could stay here for some time now?
Yeah, good morning, Sakshi. Good morning, Sanjeev. I think it was long overdue. The type of run-up which we have seen in most of the public sector undertakings, be it from the power play or from the railway play, was quite a big extension. Like if we were, as an analyst, we were discounting FY 27 and 28 numbers to justify the kind of valuation which these companies were enjoying. So it has come up, and if you look at the delivery selling which has happened in most of these stocks yesterday, it's quite sizable kind of a delivery download was there in yesterday's trading session, and particularly from the domestic fund. So huge money was being there on the table, and rightfully before the year ending of the financial year, they have booked some profits, and their NAVs will look upgraded by booking such profits. I think today it may not be the same case, but yes, going forward from few days, we will have some selling happening into these counters. At the same time, the aggressiveness with which the buying happened, I doubt that that will again happen going forward in the next couple of months. So it will be a rest phase for most of these companies with some profit taking coming to the play till further numbers are being looked up.
Okay. Good morning to you, Dharmeshji, and a very warm welcome. Of course, this correction provides opportunities to people such as you who understand the dynamics of earnings, as also projections, to look at stocks which you perhaps wanted to buy for the long term, but were constrained because of prices. Now those prices are correcting sharply. Even if they haven't come to your expectations in terms of where you would like to put in a buy trade, nevertheless, what are the stocks under consideration that you may want to purchase?
Yeah, good morning, Shalji. I think there's still some leg to go before you can put a finger on your specific likings. And I mean, if you look at the way the stock prices were moving and the way the earnings are coming, it was like six sixes in six ball. That kind of a run rate was happening. I personally did a aggregate of around 340 companies outside of Nifty basket, and to my surprise, 42% is a year-on-year PAT growth for this aggregate, which includes your misses like IT basket is there, and then the BFSI basket, a few of the big misses have been there in there. But still, like for case in point like UPL, so there are few companies which take up the earning of 2025 mid and small cap companies. Still, the earnings has been so good, and so has been the prices. So I think, as you rightly pointed out, there's some more time to my mind to go before you can put a finger and keep selecting stocks. And that is from Nifty perspective, I think 20,500 to 20,000 is the zone where it will become very attractive again. And from there one can start acclimating. Sectors, as far as concerned stocks are concerned, it will remain the same. I mean, the type of correction which we have seen in the railway stocks yesterday, or the power, some of the power sector stocks, I would be looking at the same pockets to get back into, to deploy the fresh capital, provided they come down around 15 to 20% more from where they are standing from the current level. So like RBNL, if it below to 200, it's a very screaming buy. Same is the case with, say, SGVN, or for example JSW Energy. So these are the particular counters where I will be looking forward to, because IT, all said and done, is an extended state, but again a attractive space to be. So three sectors which looks very attractive is, one is IT, other is power sector, and the third is the railway infra.
Okay. So these are the key sectors and the stocks that Dharmesh is bullish on. So RVNL below 200 should be looked at to be added at the levels, and of course JSW Energy and SJVN would also be attractive once there is further correction. IT, power, railways and infra, these are the four sectors that Dharmesh is positive on at this point in time. Since you talked about power space, let me talk about Coal India that came out with the earnings yesterday. What did you make of the earnings? And after the earnings, of course, we've seen again a spectacular run on this stock as well. The positive part is that the earnings are supportive this time around. Do you think that there will be further move on the upside on Coal India vis-a-vis where the companies have reported poorer earnings after a run-up, and where we have seen the markets punishing them as well? So how do you see Coal India in contrast?
Yeah. See, Saki, there is no scope for anybody who is reporting poor set of earnings in such kind of a market.
Yeah.
Coal India has, it will be very interesting to watch out how, the institutions play out Coal India today, because this is a stock which was hugely lapped up by them, and they were an aggressive buyers into both FIIs as well as DIAs. They have been buying Coal India aggressively. And the trajectory which has been given by the power ministry is very conducive for Coal India. I mean, 80 gigawatt of additional thermal power plant coming into play. Nobody have thought of this kind of an activity a year back. Everybody was just focused on renewables. And if you look at it, around 21 hours of power supply is already being there pan India. So this is what the government's white paper, which they came out, suggests so. And believing the same white paper, I think aggressive expansion and the per capita power utilization is where the entire theme is setting on. The volume of tech has been great for Coal India. It has been, going up considerably. To my mind, if you just strictly speak about valuation, there's still upside headroom left for Coal India. I mean, 15-20% kind of an annualized return from the current stock price is very much warranted. The type of ROEs and the cash flow this company enjoys, and still the valuation multiples are quite below as you compare the same to the private sector play. So there is a scope, but I would like to see how the trading place sets in the Coal India in today's marketplace. In case there is a profit taking, so again, I would be a buyer in that, and we would be recommending our clients to buy the stock. But yes, if profit taking is coming, then I will wait for 10% kind of a correction. Otherwise, if you are ending in the green today, it's definitely incremental money is to be put into Coal India from current levels as well.
Okay. Right, that's as far as Coal India is also concerned. Let me ask you one more stock then, and that is on sale. Here the numbers were weak. How would you really look at it? And along with it, I'll put Hindalco as well. That's come on the radar of brokerage houses as well. How would you look at these two particular counters from the metal pack as of now?
See, both are different plays. SAIL has come off from its legacy problems and enjoying the infra spending by the government of India. The steel supply, I mean, the grades of which the steel SAIL supplies is now of a superior quality, other than the 10 years, 15 years back. So there again, the company enjoys a very good valuation, elbow room when you compare this with say Tata Steel or a JSW Steel. So, but I would still, if you from the steel space, I would be still looking at JSW Steel as a play out there, because that's a pure Indian centric play with a huge operating margin efficiency out there, and the management is very progressive as far as dealing with the kind of a steel demand and scenario is concerned. So the top pick out there would be JSW Steel rather than a Steel Authority of India. As far as Hindalco is concerned, nothing wrong with the business. The company has been doing fairly well. US has been very resilient. Their analysts and novelist is also coming up with good numbers, and the aluminum play is here to stay. Though and benign commodity prices helps them with the margins as far as case manufacturing is concerned for the novelist and analyst part. So that goes well. But what they have done yesterday is the announcement of a capex plan, and there's a 60% increase in that capex. So market doesn't like such kind of a huge capex plans by metal producing companies. So I think that will play a negative sentiment. So wait for this thing to be digested by the market. The stock prices of late last 6 months have done up significantly higher. So some aggressive profit taking can be underway. When it cools down, the profit taking happens, then again it becomes a very good value buy. So valuation wise, no problem. Business wise, no problem. Though sentimentally and with this capex announcement, will have a drag on the future projects. So many of the analysts will be reworking their numbers and bringing down the EPS estimates. And with that correction setting in, I think it will be again become a good buy. So overall, from a long-term perspective, it's definitely a buy, bullish on it, like I have been bullish on Coal India. But for Hindalco, I would look for correction before getting into it.
Okay, fair enough. What we'll do, viewers, is we'll take a very quick break. When we return, we will discuss and open with the pre-opening trades and discuss more stock ideas. Stay with us, viewers.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today. We have pre-open rates from the market. The Nifty is opening in the green, which is absolutely fine. 50 points higher, 21,667. Remember, these are the cues that we got from the GIFT Nifty as well. Let's drill down, look into how the index heavyweights are performing. It's a nice sea of green that you see across the 12 index heavyweights that I track, and more so after 3 out of 4 sessions have been in the red. Let's look at what the bounce is looking like. HDFC Bank is 0.6% higher, 1398. Infosys at the moment is flat, doing nothing at 1680. How about Reliance? About 12.7 rupees lower at 2892. Okay. How about the other 2 corporate banks? Axis Bank 1.27% higher, 1060. ICICI Bank 1005, about 0.9% higher. Both the ITC and Hindustan Unilever are in the green. Let's look at TCS. Okay, TCS is flat 4120, and Infosys again I want to look at it, is up almost 10 rupees at 1690. So Infosys, HDFC Bank in the green, Reliance for the moment flat. So 2 out of 3 super index heavyweights are in the green. This should look good for the Nifty, at least to start with. It is 78 points higher, 21,692. Are we going to see a bounce led by banks, and why banks? Because Nifty Bank is at 200 DMA and you expect short bounces from there. Okay, now let's shift focus to FNO. Sakshi metals are in pain. Steel Authority post earnings 4% lower, 118.10. Hindalco has numbers today, 5.5% lower, 550 for you. Pain continues in Bharat Forge, another 7% downtick, 1050. You have profit booking happening in Nalco, Canfin Homes, and Power Finance Corporation, anywhere to the tune of 1.5 to 1%. Let's look at the top gainers in FNO space. Okay, you have cement. Dalmia Bharat 5.5% higher, 2162. You have NMDC 238, 3.4% higher. BHEL ahead of earnings, 2.6% higher, 222.40. Bandhan Bank after yesterday's drubbing, the counter is 2.5% higher, 205. People need to stay away. Lots of news items coming about how loans have been dispersed, and that's not really good news for Bandhan Bank long-term shareholders. Top losers, the same set so far. Bharti Airtel is also down 1.6% at about 1100. A very quick detour to NSE 500. Okay, Sakshi, now listen to the pain points. HUDCO 9% lower, 164.20. NBCC ahead of earnings, 9% lower, 121. Paytm, it's broken its previous low, This is bad. 7% lower, 392. Pain continues in SGVN, 106, 5.5% lower. So profit booking, an extreme set of selling coming in the 4 or 5 very high beta counters from the PSU basket. What's in the green? GMR Infra 5% higher, 89.85. JM Financial 1,102.50, 4.5% higher. Masgaon, the earnings came in the last dying minutes of trade yesterday. It was a blowout, 22.60, 3.5% higher. This is how we are looking at it, and we are now also waiting for Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial, to join us. But till that time, Dharmeshji will comment on his outlook on Masgaon after yesterday's fabulous earnings. Dharmeshji, would you want to stick your neck out on this one?
Yeah, definitely, Shailji. I think Masgo Doc, the company has been great, and off late the entire business structure has changed. Earlier, it was more of a repairs and maintenance kind of a company or undertaking, and now its shift has been to shipbuilding as well. So I think, but again, you should have a long-term perspective of 3 to 5 years at least when you are buying such companies with a very clear horizon that quarterly earnings update won't be looked into, because these are lumpy businesses. Few quarters will be very exceptionally good when they book the entire profit, and there will be a few quarters when it's a work in progress, there won't be any profitability out there. So it's not a company to look from on a quarterly angle, but the business remains as it is. The order book is strong, and I think if some correction sets in, because PSU are facing this kind of a correction, so it has to be left into. If you already are buyer in this company, stay invested. So valuation wise, the comfort is still there. I don't think it has run up too hard, and from 3 to 5 years perspective, it's a develop from here.
Okay. Dharmesh, on Paytm again, let's revisit that stock. The Macquarie has actually come out with its report where it has further downgraded Paytm. That they have cut the targets from 650 to 275, and they've downgraded to underperform from neutral rating as well. And they do believe that Paytm's business model is now itself in question due to uncertainty on the lending business, and they fear a mass customer exodus as a big risk for the company going forward. How would you really look at Paytm now, and sharp downtake again being seen post this report?
Sakshi, if you remember our last conversation last week's
Yes.
evening, and that day Paytm was making a bottom after hitting a 10% growth certificate, and it was coming up. This is precisely what I outlined. That the entire thing about Paytm was this fintech business model which was helping it to earn profits, and that was the upward trajectory which they have, I mean, messed with great or a big time. And there were multiple lapses of compliance. So run-up was there, but I was never convinced upon that. And thankfully, when I heard the policy, RBI policy, governor was very clear on the multiple counts on which the lapses has been there. So I mean, crybaby kind of an attitude doesn't work in the industry. So if you have done something wrong, you would be penalized, and very rightfully, because this entire mass exodus of customers will go, and it's very difficult to earn the trust back. Trust is something which once lost is lost forever. So there is no second chance out there. So I think I don't know where the stock price is going to stabilize, but as far as buying this company is concerned, definitely not.
Okay. Let's welcome Akshay now. Akshay Bhagwat is with us. He's joined us. Akshay, very good morning to you. Your take on Paytm, and first on the first reaction when we've seen about a 5% downtake following brokerage houses downgrade on Paytm again, and of course your own sense of how the markets and which are the stocks that you're betting on.
Yes. Good morning, Sakshi. First of all, if I were to comment on Paytm, it's highly volatile around the range of 400 odd levels. There has been strong pickup of volumes, and this is especially the levels almost where we saw somewhere by the closing of December 2023. So there is going to be volatility, but definitely considering the fact that still it is a news-based stock, and negative news flow is constantly, keeping the selling pressure on the stock. I would not recommend environment to buy the stock. Slowly, as we understand, although there are good buying volumes, some trading interest picking up around levels of 400. 500 is one level where the pressure is building up. So it is going to be volatile, but still the advice is there can be some more pain in the stock. So the advice would be to stay away, or in case you have it, keep some stop losses. Maybe 380 is the stop loss you should be working with. But clearly an exit is what I would suggest from a trading perspective in Paytm.
Okay. Very good morning to you, Akshay, and a warm welcome on Market Today. Good to have you on this kind of a volatile performance. Bank Nifty 200 DMA, this is a pain point, and the main reason why the Nifty is also showing such volatile movements. What's your prognosis on what's wrong with Bank Nifty, and where do you see it headed?
Good morning, Shailji. If you look at Bank Nifty, Bank Nifty majorly in the last few trading sessions was up on support of PSU banks. Now, State Bank of India, Canara Bank, these were the banks which were taking the lead. There has been slight profit booking in the banking stocks, as I understand, the last couple of days. But there is one support which traders can look forward to. The support is 44,500 basis Bank Nifty spot. We are almost around 300, 400 points away from the levels where we closed. So I'm not ruling out chances that Bank Nifty can stage a comeback from these levels. PSU banks might again hog the limelight, especially Canara Bank, Bank of Baroda, State Bank. The buying is intact, the demand is intact, just that it was overbought for comfort. So you're getting a slight dip in these counters. So I would be buyer in the PSU banking space again, since it is offering a good opportunity from a risk reward perspective. Bank Nifty per se, looking at the derivatives data and also the technical setup, I expect a recovery coming in from the levels of 44,500 for the bank index.
Okay. And Akshay, your two picks for today, what are you looking at on the charts?
Yes. So from the charting perspective, there are a couple of picks. One is from the healthcare space, that is IPCA Labs. IPCA Labs, if you look at the charts, it staged a good breakout a few trading sessions back at the level of 1150. Post that, there has been a slight profit booking seen in the stock, but it is giving you a chance to re-enter as the prior resistance now becomes the support. So 1150, 1160 area where the stock closed yesterday is seen as a good buying zone for this stock. Recovery again can see the swing highs of 1250 being retested. So I will buy IPCA Labs for the target I gave with a stop loss of 1125. And second trade I would look here is banking. So here State Bank of India, which has been an overperformer, I may say, in the current market situation, is one counter which you can look at. 705, 703. If these levels do you get them, these are again buying opportunities for State Bank of India. I believe new highs are yet and momentum is yet to pick up in the stock. So buy State Bank with a stop loss of around 685, target around 725.
Okay. IPCA Labs and State Bank of India. There are two stock ideas from Akshay. Akshay, what would you say on Coal India, opening about 2.5% higher in trade in the pre-opening trade? At least that's the indication as the top mover after the earnings.
Yes, the earnings have been positive for Coal India, and yes, as you rightly mentioned, the opening is good. The stock has been in a fantastic bull run in the last few months, and I believe the corrective action which we saw in the last couple of days just makes it more from a risk reward payoff. It's a good entry point where we are getting it currently. So yes, considering the fact that results nowadays, the stock is behaving exactly opposite of the results which we have seen the last couple of sessions. I would wait for the stock to settle down a bit in the first 10-15 minutes. Looks positive as of now. 420 is the support and 475 would be your target.
Okay. Oh, got that. There is an important information that I just wanted to pass,
Sakshi,
and that is MCX has said that there is some issue happening in that exchange, and perhaps they are looking at resolving that, and therefore they've said that trading will resume only at 10 a.m. So for all those investors who trade commodities on the exchange, this is an important information in case you wanted to look at why other prices are not moving or something is happening at that time. There is some kind of a technical glitch that they are facing at this point. Yes, Shail.
Sakshi, let's look at MCX. This is one of those stocks, of course, has done fairly well, but their technical and back end woes don't seem to be ending at all. It's a quarterly phenomena where the company says that they've passed the problem, and again it happens as regularly as it's becoming predictable. Okay, let's look at now prices again. We are at 9:14, about a minute to go, and let's look at how the top gainers in NSE 500 are looking. We have Bharat Forge 2.65% higher, 1160. Okay, the prices are now ticking. The Nifty is opened 40 points higher, 21,658. Bank Nifty is bouncing from 200 EMA, 44,940 for you. The IT index at 38,100 is 87 points so higher, and the Nifty 500 is opened in the green. Now let's set our eyes on what the index heavyweights are doing. I think banking is going to see a bounce. HDFC Bank first, flat 1391, a rupee and 50 higher. Let's look at what Reliance is doing, 14 points higher, 2918. Let's look at Infosys, 5 rupees higher, 6485. Let's look at what the two corporate banks are doing. Axis Bank 1049, 2.5 rupees higher. ICICI Bank 6 rupees 35 paise higher, 1002. How about ITC? This has been a disappointment. About 70 paise higher at 407.75, slipping further lower. Sakshi, the good part is that all 12 index heavyweights that I track are in the green. Now let us see how that continues. Let's look at the top gainers in the FNO space, because those are the earnings boys. Coal India 2.5% higher, 433.80. Motherson Samvardhana, the numbers came in late during market hours, 115 rupees 55 paise higher. Nothing much in terms of other stocks. Let's look at the top losers in FNO. Hindalco 10% lower, 524.20. Steel Authority 4% lower, 117.85. Bharat Forge, the pain continues, 2.5% lower, 1100 almost. ACC 2601, 1.31% higher. National Aluminium 0.5% higher. Let's shift focus to NSE 500. You will see bleeds in Paytm, 6% lower, 395. Remember, the earlier low was also 395. Let's see whether this one breaks or not. You have IRB Infra 4% lower, 58.90. You have SGVN 3% lower, 108.90. Steel Authority, NBCC 3% lower, HUDCO 1% lower, 178.60. Let's shift focus immediately to Akshay. Akshay, the markets are open. Nifty is in the green, Bank Nifty also in the green. The PSUs weak but not so bad as was expected. What are you looking at in initial trades?
Well, initially there is one stock which has not corrected much and where the trend is very strong. That is Tata Motors from the auto space. 916 is where it trades right now. 900 is a very strong support base from the derivative segment as well as from the technical parameters. So I sense that there can be some recovery. So if you're looking at stocks to buy from the auto space, it has to be Tata Motors. A recovery or a pullback can see the stock retesting 950 on the upside. Your stop losses would be around 895 on this trade. So Tata Motors is one stock which comes to my mind looking at the opening trades. And yes, PSU banks might again be the flavor for the day, especially State Bank is what I believe should take the lead.
Okay. Uh, Dharmesh, let's get your view in on the opening as well. Which way would you be tilting? Is it again PSU banks that you would be looking at too?
It's actually very difficult to predict because to my mind, I mean, next 1 month is going to be a rotation kind of a market. One day one sector will do well, and next day there will be some profit taking happening into that sector, and some other sector will pick up. So it's very difficult to predict which are the sectors on which day is likely to do well. So today it may be a case of maybe some consolidation comes into play with the PSU banks as our friend Akshat was pointing out. But for next month, I think it's more of a range-bound trading activity with a profit-taking bias, which will be playing out. So you have to be very mindful of your trading bets if you are placing in current market. In that scenario, I think what stands out or which is likely to stand out would be IT stocks. They are the one pocket where you can have a decent traction coming into play with the power sector again. As JSW Energy, I pointed out. So those JSW Energy, Tata Power and all on a good correction you can look at. Automobile component, auto component like Bharat Forge and all have corrected quite deeply now. So it has now come into a zone where valuation comfort is creeping back. And but see, there was nothing wrong with the Bharat Forge numbers per se, and but it was lower than what the consensus estimate was, and that is what led to some decent correction. So these JBM Auto is another case in point. So auto component, power sector stocks, IT, and public sector banking stock, PSU banks. These are the pockets where one should be looking for opportunities, and it will be more a technical driven play rather than a fundamental play as far as trading is concerned now.
Sakshi, 2 points I like to make, and this is only and only on the trading aspect of market. One, autos are taking it away. Bajaj Auto is at a fresh high. When you look at the price, it's trading substantially higher than what it closed at yesterday. 78.95, about a percent higher. And as also, if you look at the other spaces within the auto space, M&M is doing fantastically well. So as a theme, auto is moving up. And when you look at the other top gainers, Hero Motors 2.5% higher, 48.11. Ashok Leyland buzzing at about 173, a percent higher. Tata Motors, as Akshay has pointed out, 918.50, about a percent higher. So that's a theme that is tricking. Now, what is the most interesting part, Sakshi, is again in the PSU basket, and I'd like to SGVN. The price that you see is 110 rupees, about 1.9% higher. What is interesting, Sakshi, is that it's recovered from an intraday low of 103.65. Okay, look at NBCC, 128.20, 3.5% higher. The price that you see of 128.20 has recovered from an intraday low of 121. So either these are shorts getting covered or these are fresh purchases being happening. Look at another very high beta counter, PFC, 424.90, now in the green. Interestingly, it was at a low of 418.10. It will be a very educative exercise today to look at how these stocks close. Let's look at another very, very high beta performers, which is the PSU banking basket. Please allow me a moment. I am just getting that data in because it becomes a little difficult to get the intraday high as well as the low. Okay, we have the PSU banks in front of us. Bank of India is the top gainer, 2% higher, 131. Maharashtra Bank 55.65, a percent higher, half a percent higher. Central Bank at 60 is a third of a percent higher. Let's look at the losers. Can Bank, no problem here, it's profit booking, 538, 539. I just want to see what the low is here. And the low on Canara Bank, ladies and gentlemen, is 537. So nothing much happening there. Let's get Akshay into the conversation. Akshay, Bajaj Auto, 7932, taking it away. Any call that you would want to pick up on this one? Let me also see the 7900 call on Bajaj Auto. Akshay, over to you.
Yes. It's unstoppable. I mean, whatever is happening around in the index or in stocks, Bajaj Auto is one stock which is moving very strongly up. So after a slight pause, which we have seen in the past 5-6 trading sessions, today the momentum seems to have resumed again. The opening certainly is very strong. Probably from here, 79.50 is the target one can look forward to from a short-term or a day trading perspective. The support area works to around 7775. So if you want to time this trade via the options, then yes, at the money 17,900 call in Bajaj Auto should be the option strike you can look forward to. So if 50 rupees moves from here, you can expect the premium in the stock to jump by around 20 odd rupees from the current level. So yes, consider it as a buy at the levels of 7,900. The premium roughly is around 195. So your target should be around 225 and stop loss should be around 160 on this trade.
Okay, so that's as far as the auto pack is concerned. Dharmesh, to you, you were briefly mentioning about the railway pack, and I can see a few stocks that are ticking higher in trade today. So stocks like, RVNL, IRCON International, and IRFC, they are ticking higher. IRFC is looking very, very positive. So RVNL is up by about 3 odd percent, 236. Let's look at IRCON International, 3.2% higher at 200. IRFC, let's look at that one. I did see a price of even 143 odd levels on this one, which is a jump of 7% on an intraday basis too. How would you really look at this pack now? And do you see that now the profit booking has over? People are again buying into dips now in the railway pack.
Sakshi, to my mind, I mean, this kind of buying which we are seeing, and Shelly also pointed out a few other stocks. These are basically, I mean, 100 rupees, 50 rupees, or 200 rupees kind of a stock price as far as they are concerned. And normally, the retail segment queries, if you go by with all the brokers out there, so most of the people are interested in buying stock which is priced in the range of say 50 to 300 rupees. So I think today buying is more to do with the retail segment coming into play because for them the stock price may be looking very attractive. And I would like to do some data analysis before coming to the conclusion that buying is over because yesterday 400, 800 and things like in that range the delivery marking was there in yesterday's trading session. If today the delivery marking is higher than that, that implies some institutions have also started acclimating these companies at current levels and they are looking attractive. So from trading perspective, I think 10% down the line here would be very great. I mean that where everybody will become buyer out there. But at current levels, whether some more selling is pending or not, today's delivery data will determine that. If it is higher than yesterday's, definitely then the trade is on. From the long term perspective, they are good buys. No denying that.
Okay. You know what's interesting is that they have, seen sharp buying from the low of the day. The low of the day for IRFC was 127. It went up to a high of 145, right now trading around 142. RVNL, similar story, 223 was the low. It's now trading at 238 odd levels again. JWL, up from 343, it's now up at 350. You're also looking at IRCON International from 194 to 201. So a lot of buying has happened from the low point of the day as well. A very, very sharp move coming in. Akshay, anything that strikes you from the railway pack?
Well, this railway pack has seen some profit booking because they were stretched beyond comfort. But the way the opening trades have been today, the sense is that these stocks are searching for a possible bottom somewhere. What I understand, looking at some of the stocks like RVNL, probably 220 to 225 is the level where some bit of demand is slowly emerging as far as the day trading goes. Even the 50-day moving average coincides around 220. So there is going to be some bottom fishing around 220 to 225. You might not see the momentum in day trade itself, but it might take some time before the stock launches itself. So this is a buying zone definitely for RPNL. Upside can be 255 from the short term perspective. Keep a stop loss of around 212 on this trade and trade for a bounce back from a time horizon of 4 to 5 trading sessions.
Okay. Sakshi, heavy selling pressure is seen on the Nifty now, down 23. So the point that we had tried to make, that you look at an intraday bounce and sell into, is now working very well. Let's look at the options picture within the Nifty, and I'd like to highlight in a moment the Nifty 21,600 put expiring on 15th February. Now 21,600 put is at the moment 127 rupees. 50 paisa. I'll again repeat, we are looking at the Nifty 21,600 put expiring on 15th of February. Yes, this is the price. Akshay, any view that you will have on this one?
Uh, the setup as far as short-term trading is a slightly negative. If you look at the last couple of days, there has been some slight short build-up in the Nifty, but there is some support which will re-emerge in the Nifty once it nears the 21,500, because there is a lot of option writing place for the 15th February weekly expiry. The level roughly coincide around 21,480 to 21,500. So yes, be prepared for some bottom fishing. I would be more comfortable to take a long bet from a trading perspective once Nifty nears 21,500. Good moving average supports, derivative supports, a lot of supports converge around 21,500. So an ideal point to buy Nifty with a stop loss of 21,425. A recovery can see Nifty going all the way back up till 21,725.
Okay, I'll request the PCR to again show that option. Remember, we started tracking it at about 127, 128, and at the moment, in less than 4-5 minutes, it is at 141. We'll have to, I think, reboot the price because it's showing 00, which is not true. The put we started tracking at about 127 rupees, but it's now at 141. So that's the move coming in. And Sakshi, honestly, the pace of selling at the moment is accelerating on the National Stock Exchange. Let me show you stocks that are responsible for this pain on the Nifty. Hindalco 11% lower, 517, 21 points down, contributing to the Nifty. Infosys and Bharti Airtel are down about 1.5% respectively, contributing 7 points each to the negativity, and TCS and HDFC Bank contributing 5 points each. ICICI Bank, like we had probably mentioned earlier, you should see a short bounce from the 200-day DMA on the Nifty, is contributing 22 points in the green, Reliance 9 points in the green, ITC, NTPC and Hero Motors respectively 3 points each. The Nifty is now down 58 points, 21,550. Sakshi.
Absolutely. Let's look at the healthcare pack again. About a 0.5% increase that we can look at on the healthcare space. Remember, this is the space that has been constantly showing some signs of a pickup happening. Akshay, to you, how would you really look at the entire healthcare pack? We're looking at stocks like Divi's Laboratories, Dr. Reddy's, even stocks like Cipla, for example, that's moving up in trade. Ipca Laboratories is something that you already marked before. How would you really look at these particular counters now showing some signs of a pickup?
Yeah, yes, it's a defensive bet in the volatile market conditions we are in. And pharma has been in a good rally in the last 15-20 odd days. So here, especially the likes of Cipla, Dr. Reddy's, Lupin are some of the names where you can consider a buy trade from the short-term trading perspective. Yes, most of them have opened up and the momentum will be on in these stocks. So Dr. Reddy 6343 is where it trades. Upside can be around 6450 with a support of 6200, and Cipla is the another stock you can consider with a support of around 1410. You can target around 1475. So yes, the momentum and the short-term trading parameters are still a buy on most of the pharma names.
Okay, so pharma names still look in the positive zone right now. We were mentioning about the entire power pack led by Coal India, NTPC up in trade as well. Some of the counters that are still showing a lot of downtake also include IREDA, which we've been constantly marking to you. Again, a 5% downtake on this one. It's been constantly facing series of lower circuits, from a long time, and a pressure after the stock had hit nearly 200 odd levels. It's been constantly on a downward trajectory. Akshay, do you track this? I know there is not a historical chart for you to really study here, but what would your sense be on IREDA?
Yes, IREDA was a one-way mover from 100 to 200. It almost doubled in a very short span of time. But yes, if you are going to make returns so fast and so soon, you should also be prepared for some awkward jerks when things don't go your way. So I believe the support of 150 is one level where there can be some bit of bottom fishing or some buying or demand area for IREDA. The way it is trading, be prepared for any bounce backs also, because demand is going to come in very soon and very fast. So 150, 155 roughly is the area where I believe there can be some buying in this stock based on technical parameters. Your stop losses in, or if you're going for this trade, should be around 145. A recovery can once again see a circuit scenario with an upside till around 185 to 190.
Okay, let's again look at how the market is performing, Sakshi. And a lot of high beta stocks are in the pain again. I'd just like to mark HBL Power. This is again a railway play, 473 in front of you, 11.6% higher, and fairly strong volumes of 43 crore rupees. IRCTC 2.5% lower, 880.60. Remember KPIT, it's now about 1613. I think it's 5.5% lower. HUDCO 8% lower, 165.40. NBC 8.9% lower, 121.50. And we have ITI at no, this is not the right price for ITI. The defense space is also under pain. BEML is something that I'd like to mark. 4.5% lower, 27.59. We have pain coming in latent view, 3% lower, 495.50. And Sakshi, we have actually a green tick on Cochin Shipyard, okay. 807, 0.2% lower. Sakshi.
Mid cap and small caps are under pain now, 1% lower for both these indices, and the selling pressure is now escalating. How would you really look at the broader market space, Akshay, the mid and the small caps now? And do you see there will be continued pain in this space?
Yes, see, mid cap and small cap have been the performers lately, and when it corrects, these stocks will feel the pain. Yes, the short-term scenario might be a bit painful if you are a day trader, but I believe, still there is a good scope for recovery in the market. It's not that we have topped out as of yet. So, yes, the pain should be short-lived, maybe limited to intraday or maybe a couple of days. But I believe, banking can again save the day as we progress. There can be a recovery in the second half today. So if you're specifically looking at mid caps, yes, most of the mid caps are under pain. Might continue for intraday is what I sense looking at the opening trades.
Okay. What we'll do, viewers, is we'll take a very short break right now, and when we return, we will discuss more stocks and the entire market strategy with Akshay. So don't go anywhere, stay with us, and we will continue to focus on still the winners in this market, which is very, very volatile.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today. 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back to Market Today. The battle between the bulls and the bears for dominance on Dalal Street continues apace, and no better playground than the PSU basket, which is low ticket, high beta, as well as the one in maximum demand, which is doing phenomenally in terms of how action is. Sakshi, again, I'll mark the low on several PSU stocks, including now some banking stocks, and then mention how the price is moving. Let's look at IRFC 141.30. This is 6% higher, and the low is 127. Let's look at Central Bank. The stock is 1.5% higher at 60 rupees 95 paisa. But the low is 58.40. Look at Maharashtra Bank, 56.70 for you, 2.7% higher, and the low is actually 54.30. What's also interesting is how stocks such as Bank of India have moved. 130 rupees 85 paisa, 1.8% higher. The low is 128, and there are many other examples where you see this. Look at PNB 119.20. The stock is about 0.8% higher, and the low is 115.70. So smart traders are using this very sharp dip to again get back into quality momentum stocks, Sakshi. That's the limited point I'm making. And it's the pharma big boy in Divi's Lab, which is moving to a weekly high, 2.38% higher, 38.29. Sakshi.
SBI, which Akshay pointed out, it's now 0.5% higher in trade from the PSU banking space. There is a lot of buying that's happening in the banking space from the low of the day as well. Akshay, what would you revisit your targets here and tell us how would you really look at SBI now?
Yes. So out of the PSU banking space, SBI is one stock which is very strongly positioned on the charts. It has been a bit off momentum yesterday considering the market conditions, but consider it as a good opportunity to re-enter the stock. The momentum should regain and 725 plus targets should be on very soon. Even from a day trading perspective, I see upside still 718, 718 to 720. So it's in the buy zone. Consider buying it with a stop loss of days low, that's 701. Day trading target 702, positional targets 725 plus.
Okay, positional targets would be over 720, 725. We'll keep an eye out on all of these. But like how Shail was also pointing out, Akshay, the entire PSU pack, it's really looking at a tug of war really taking place between the bulls and the bears. And of course, a lot of investors out there may be looking at this opportunity to perhaps buy the dip in the stupendous rally, and because a lot of FOMO exists among investors, those who have seen this rally unfold in front of them, and they have largely remained shocked and out of this rally. Do you think this is the time that they can actually select a few PSU stocks and invest in currently, and which are the PSU stocks that you believe should be invested in at the current pain?
Yes, so PSU banks definitely is the flavor for the short term or medium term investing or trading. Here, if I were to take a few of the names here, definitely from the few stocks having exposure in the futures and option space, it has to be State Bank and Bank of Baroda. So these are the two names from FNO stocks. And from the stocks which are low ticket size stocks, one can be Union Bank of India, which is currently trading just a minute. Union Bank can be one stock which you can keep on your watch list. Here, the setup is very strong. It's just that it is giving you an opportunity to re-enter the trade at levels of 138. I believe 150 plus target should be on soon. So, Union Bank of India is one stock you can consider, and Bank of India is another stock which can be on your buy watch list from the small ticket size names from the banking pack.
Sakshi, things are getting more interesting in the PSU basket. I'd like to point out LIC. The most recent high, almost 1200. It's 1175 to be precise. This was on 9th of February. 3 days of consistent selling. The counters now below 1000 rupees. About 2.5% cut coming in today. Let's see how this shapes up. This is and a very interesting stock as far as long-term holders of this one is there. Look at RVNL. It's now 7% higher. I'd like to point out the low of RVNL today, which is 224.35, and the stock has recovered, Sakshi, 10% from that low.
Wow.
So people are using this opportunity, actually God sent opportunity, to buy at lower levels. The price of RVNL is at almost a 1 month low. Not that it matters that way, but I'm just saying that how, as Dharmesh ji had pointed out, that quality is being purchased at a relatively lower price than what it was say a week ago, 10 days ago. So these are the things that you only see being pointed out at market today, Sakshi.
Absolutely, and we are looking at this entire pack now moving. So IRFC, IRCON, RVNL, they're all up in trade. So it's the railway space that's again buzzing. Akshay, do you have any view on any of the stocks from the railway pack that should be looked at in the current momentum?
Yes, as discussed, RVNL is one stock. I thought probably, we might get this at the lower end, but it's already picked up in intraday. So you can consider it buying at the current levels, because I doubt now you might get that dip which we spoke of. So the
Okay.
target area can work out to 260.
Okay, so the target price is revised to 260. That's as far as the railway pack is concerned for you. Let's look at a few movers again. We were talking briefly about the auto space, which Shail pointed out, and that space is looking very positive. Hero Moto especially is now picked up pace, 2.2% higher in the F&O space, 2.5% up on the Nifty as well. And, apart from this, some of the ancillary stocks are also moving up. So JBM Auto, which we've mentioned many times on the show, has also moved up very, very sharply in trade. How would you really look at the entire auto ancillary basket now, Akshay? Any particular stocks that come to your mind here, and what would you suggest?
See, auto ancillary might see some bit of a pickup here, but these are all trading bets, as I understand.
Okay.
From the auto space, especially, Tata Motors is one stock I'd be very keen on, the stock which I have recommended in the morning trades. Although it is a bit subdued in the morning session today, it's not doing much, but I believe it should be a recovery candidate when the momentum kicks in. So I am bullish on Tata Motors as a pick from the auto space. And here, which Shailji discussed, Bajaj Auto stock at the all-time high, that also has a very strong technical setup. So Tata Motors, Bajaj Auto, these are the two stock names from the auto space. And from the auto ancillary pack, if you're looking at it, has to be Apollo Tires, which
Yeah.
has seen a slight correction, giving you an opportunity to re-enter at the support at dips of 510. So yes, might not be an intraday candidate, but I believe it should recover its lost momentum soon and revisit levels of 540 plus.
Okay. Tire space
Okay.
will be in focus.
Sakshi, I'll like to point a breakdown.
Okay.
I'd like to report a breakdown, Sakshi. This is SGVN. Now it is precariously close to two digits, and this is not something that is being liked by the bulls on the long side. So today's high was 113.70 and it is now slipped to 101.85, and the selling pressure is fairly substantial when you look at two successive block deals, 4 crores 37 lakhs in terms of value and 2 crores 47 lakhs. So another one for 80,800 shares. So this is under pressure. Essentially the point is that railway is showing strength at lower levels, and power space is under a bit of pressure. Since the time we've marked it, the stock has slipped a rupee further lower. Okay. 1,170, 100 rupees 70 paisa for you, and it's the supports that are sort of giving way. At this level, let me see which EMA it has broken. 101, I would imagine the 100-day exponential moving average has slipped. Akshay, would you take a look at the charts for SGVN?
Yes. So very strong profit booking in the last 3 days, and primarily that's been on the bad numbers which the company reported. As it trades right now on technical parameters, it is below its 50-day moving average, so that's slightly a concern. But somewhere my sense is that it's a slightly oversold counter. There is going to be buying demand. The area can be around 100 odd level where it is nearing. So yes, I would like to buy slight momentum in the script. 100 is an estimate base which I believe can be a possible area for some recovery in SGBN. Consider buying the stock on a slight recovery if it manages to sustain above 106. So on momentum recovery, you can buy this. The upside can be 125.
Okay. Right. Akshay, let's revisit Hindalco. The stock is now down 14.5% lower in trade. And of course, this is after the company has announced huge capex in the American plant. And of course, the plant will be commencing operations much later than anticipated earlier. Those are the pressure points. And of course, the Novelist results, 500. And it also tested this level on the downside today. How would you look at Hindalco now?
Yeah, very strong reaction in the stock on the back of numbers, very heavy shorting and long liquidation. Even the option writers, the put writers are caught on the back foot, and serious unwinding from them is causing this kind of pain in the stock. My sense is this stock might see some bit of a relief support or demand once it nears the level of 490 to 500. So maybe 8-10 rupees more to go on the downside. There's where some demand might creep in the stock. So the momentum is lost for the time being. It's not a short-term recommendation anymore to buy in Hindalco. But if you're searching for a base or an area where you can buy and hold, then 490, 495 is an estimate where the stock might see some buying demand getting in back. So that is the area you can target to buy once it nears those levels.
Okay, Sakshi, selling pressure in the market is now extended to the oil marketing companies. Let's look at BPCL, HPCL and IOC. These were, remember, the market darlings till about 3-4 days ago. IOC is down 1.5%, 173.55. HPCL is down 1.3, BPCL is down 1.1%, and Gas Authority is slipping a percent lower. So the extent of losses on these is not what they were on energy counters such as NHPC, SGVN. So this is some kind of a sensible sell that's coming in. Let's look at Petronet. It's just flat, 258. So the point I'm trying to say is that high beta is correcting very, very sharply, and high beta minus railway is what you see the correction in. Railway is getting purchased at lower levels, at least some railway stocks, and metal is in pain. Hindalco, as you rightly pointed out, has a lot of long liquidation and shorts getting built into the system. Open interest for Hindalco is 16% higher, coupled with a 14% rise in drop in price. So this is a very, very heavy built up of shorts happening. Bharat Forge 3.5% lower. The open interest is 6% higher. Coal India in the green, 1.2% higher. This is a rise in open interest. I think Coal India is something that we should again revisit, Akshay. Now that the first half an hour is passed and the counter is able to maintain its gains, what would be the medium term outlook on Coal India? In fact, Sakshi, Coal India is the second highest traded stock future today, which is a bit of a revelation even for me.
Okay.
Yes, for Coal India, well, the stock is showing some signs of a bounce back post the numbers. It is a very strong counter. It is just that there has been some profit booking in the broader public sector units, which has seen the rub-off effect in Coal India too. My sense is that the stock should recover soon. So consider a buy trade, not from trade trading, but from short to medium term perspective. Targets of 475 plus should be on in the stock. The support area I look forward to is around 430. So stop loss 425, target 475. That's the trading view which works out for Coal India.
Okay. All right. Let's look at a few more pockets that are seeing some buying emerge from the lower levels. Financial services sector is now seeing some higher takes, about 0.8% of a move on the upside. And so you have stocks like Bajaj Twins, which is Bajaj Finserv and Finance, really pulling up the markets at this point. And in the F&O space, I can again see a higher ticket item. Oracle Financial Services again picking up pace as well. The banking space is looking a little better. They are trying to pull up the markets and trying to, get its mojo back. So 0.7% of an uptick on the Nifty bank, and private banks, PSU banks all supporting the Nifty bank as well. So you have stocks like ICICI Bank that's really supporting the markets to stem the losses initially they saw. 1.5% higher for this one. Axis Bank follows. We also have State Bank, which Akshay has momentarily talked about. Of course, Kotak Mahindra Bank also moving up in trade. From the private sector banks, Akshay, which is the stock that looks positive on charts?
From the private sector banks, it has to be some ICICI Bank because broadly it's in a range from a broader perspective. Time and again, buying the demand area is around 990 to 1000. Upside 1040 is where slight bit of selling pressure re-emerges in the stock. So an ideal candidate for buy on support, sell on resistance. But there is no pain point as I see in ICICI Bank setup. So ICICI is the best setup I believe the private bank space has to offer. A recovery from here can once again see this bank going all the way up till 1040.
Okay. That's as far as ICICI Bank view is concerned. Shail, there is another update from MCX, and that is that now trading window will now resume at 11 a.m. instead of 10 a.m. So another hour delay over there, and the pain continues at MCX.
Let's look at the MCX price. I think this is extremely unfortunate, and this is something which is not expected from a service provider, that you cannot trade your position because there is a software issue. The management, of course, is to be blamed completely, and this is a recurring theme that's happened on the stock. On the exchange, although the stock is at 3478. Thankfully, investors and traders are not taking their anger out on the counter, but extremely unfortunate and unprofessional on behalf of an organization such as MCX. It has its problems known, but for reasons completely ununderstandable, this problem continues to get bigger and bigger, and presents a lot of pain points for traders and investors. Something should be done to ameliorate this pain, either by the management or by at least the software department that looks at this kind of a problem. Let me just read, Sakshi, could you send me the link that has come in from MCX? For the moment, I think Akshay should also look at Apollo Hospitals, 6,707 for you, Sakshi.
Actually, I think Akshay has left, but we will now look at winding down the market as well. We're at 9:58, and of course, I'll be sending you that link shortly. But let's, of course, it's a tug of war, like we pointed out in the PSU space. A lot of confusion between investors. Some looking at the current dips as a huge buying opportunity, a godsend opportunity, and the rest of them still in a nerves as to whether this. Pain can continue. 60 points higher right now on the Nifty, 21,676. That's the level at which the Nifty is trading at. You can see buying emerge in the Nifty Bank. So financial services, PSU banks, and the private sector banks, they're up by 0.8% each. Healthcare space is also looking positive, 0.7% of an uptick. Now you can also see the autos coming back in flavor, FMCG coming back in flavor, slight buying happening over there too. And the oil and gas stocks also, some of them at least looking positive at this point in time. So an ONGC, for example, has seen some uptick. GAIL, Oil India, these are the stocks that are picking up pace. Coal India, of course, is the one that we are looking at, which is, of course, reacting to its numbers. NHPC, NTPC also looking now positive as well. The F&O space has Hero Moto, GMR, Airports Infra after the MSCI India Index inclusion, UPL, Balkrishna Industries, Cholamandalam Investment as the other movers as well on the F&O space, and the Punjab National Bank stock as well. Anywhere between 1.5% to 2.5% move is what we have seen on this kind of market. The Nifty gainers include Hero Moto, Coal India, ICICI Bank, HDFC Life, Apollo Hospitals that Shail just mentioned, and Axis Bank as the top 5 movers. On the Nifty, on the downside, it's Hindalco, Power Grid, Adani Enterprises, Grasim, Wipro, JSW Steel as the pain points right now. Shail, anything else you want to point out before we wind up?
Yes, Sakshi. I think there is a very sensible set of traders which is operating with extreme intelligence in the market, and it's visible across the railway space now. I'll again mark IRFC. I'll mention the low and look at how the price has reacted. 127.65 is the low. You have 144. RVNL 223 is the low. The counter is up 7.75%. IRCON 6.5% higher at 206. The low is 191. NHPC Sakshi, please note this. The low is 77 rupees. The counter is at 84 rupees. Maharashtra Bank, the counter is 3% higher from a low of the intraday low of 54.30. There is some very, very sensible buying happening from all those ETFs and the potential schemes that are coming into the market from mutual funds such as SBI Energy Opportunities Fund, and I'm sure they are sort of adding value to their shareholders or potential shareholders. I'd just like to see what SGVN is reacting. Okay, Sakshi. Remember we had marked a price of 100 rupees 70 paisa. Look at the price now, 105.95. All I'm trying to say is that smart investors are using this correction as an opportunity to add these low beta high ticket PSU plays to their trading portfolio. Sakshi, look at NBCC, days low 120.75. The counter is at 123.65, still down 7%, but only time will tell. Sakshi.
Absolutely. And with that, we wrap up this special edition, but do stay tuned. A lot of action unfolds on your screens right after this as well from the world of business and stock markets. Until then, many thanks for tuning in, viewers.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Congress expelling its well-known spokesperson and TV face. Acharya Pramod Krishnan facing the axe after his profuse praise for Prime Minister Modi and Ram Mandir. The spiritual leader also slammed Congress